Hi everyone, and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Wednesday the 26th of February. We're seeing a bit of a muted handover from the Asian markets overnight. There wasn't a great deal that was positive about the sessions in either Wall Street or Asia. Wall Street was held back by the consumer confidence number that came in under expectations, and also Asian markets were held back by concerns over the liquidity in China, which has subsequently dogged the property sector as well. So Asian equities were slightly lower, and there was a little amount of any risk that was taken on board there. So the European trading session has started in a rather a muted vein. What I think is actually going on is I think investors are now becoming increasingly cautious. It's Wednesday. You've got 2.5 more days until the end of the month. And I think there's not a great deal of data that's going to come out towards the end of this week that's going to drive these markets, and I think investors are now looking forward towards next week, which has just an enormous amount of data with all the PMIs, a load of central bank rate decisions, and also the non-farm payrolls as well. So I think investors are becoming increasingly cautious as this week draws through, and I think markets are becoming increasingly range bound because of that. The data that we've got out today that you need to be concerned with is certainly the UK GDP at 930. That's the second reading of growth for the final quarter of last year. Going to come in, well, it's forecast to come in at 0.7%, and certainly you'd imagine that sterling investors would be hoping for at least 0.7% or even higher if they're going to push sterling higher. Into the afternoon, you've got the US new home sales. Last month saw a decline to 414,000, and the expectation is for a further decline to 400,000. Now that would be the lowest since September last year. So if that were to be the case, then that certainly wouldn't be all that great news. I mean, the housing data recently has certainly been treated with a bit of pinch of salt, actually, because there's such bleak weather conditions in the States at the moment. The traders have been sort of giving the benefit of the doubt to the data that's come out, but certainly any sort of further decline would not be great news anyway. Certainly for the US economy as it tries to continue to recover. My chart of the day I'm going to be looking at is the euro yen. Euro yen had a big breakout above the key resistance at 140.30, and that happened front end of last week. Sort of, you had that breakout, and it's never really pushed on off the back of that, and it's not really helping itself at the moment. It's become sort of marooned underneath this 55-day moving average, which currently comes in at 14118, and you did have a retest of this this downtrend, which once broken on the upside becomes a support, and that actually held last week, but it's not really been able to push on, and these momentum indicators are beginning to roll over, and the MACD rolling over underneath the zero line is certainly not all that positive either. So beginning to lose upside momentum in that, and it would suggest that this ranging period that we've been in for the past 3 or 4 days above that breakout at 140.30 is increasingly important, I think, on this chart. This is the intraday position, as you see here. This is the resistance that now becomes support, just in the 140.20 to 140.30 area, and that is currently holding. You could argue that the rising 200-hour moving average is a basis of support, but this chart is becoming increasingly tight, I think, with this downtrend in place over the past couple of days. The momentum indicators are not showing a great deal of indication there, so I think this is becoming increasingly range bound and needs to have a break to the upside, certainly would be looking for an initial break above that 140.83 mark, and then to push towards the 141 mark on the upside, and certainly that needs to happen, I think, soon. Certainly with this downtrend that's in formation at the moment going on, that could ultimately put pressure back on that 140.30 area. So just watch out for that, I think, today. And certainly if we start to fall below that 200-hour moving average and sustain a position below it, I think that could put further pressure and may even see the downside momentum increase once more. So it's mixed signals, I think, on this euro yen chart, but an interesting play nonetheless. Anyway, I wish you good luck with your trading on euro yen, and I will speak to you later. Thank you.